Okay guys, so let's look at idea generation. So idea generation is really a strategic approach to trade filtering. So what we're doing with this is we're scanning for specific technical criteria. So we kind of alluded to it before, but what we're trying to do is we're trying to use some kind of scanning tool, whether we're using finviz.com or whether we've got our own proprietary one or whether your broker does it, for some kind of technical criteria. So for example, RVOL, which is relative volume. So that might hide, the relative volume is basically if the volume is doing 3 times as much today as it normally does, it's how much volume is being done relative to X amount of days. So if you say, compare it to the last 10 days, this is doing 3 times as much volume, then you could say, well, that's going to bring it into my universe, because I know there's a lot of supply demand going on here. I know there's a lot of things. Maybe then I want to add a range criteria. So that gives me my volume criteria. Now it's a range criteria. Okay, I want to see a range of at least 200 pips. I want to see a range of at least 2%, 20%, 1%, whatever it is on whatever instrument you're trading. Percentage change, so range different from change. Maybe I want to look for percentage change or gap. Again, easy to do. So this comes into the kind of category, I can't remember what number we were, I think we're 2, was technical filtering. So we're specifically want to filter things that on a technical basis that then come into our, we may do some more manual filtering of course, but we might want to put these technical filters in. And then number 2 is scanning for fundamental criteria. So very easy to do this, again, something like finviz.com or any of the kind of news outlets or media and financial news. So earnings, news, insider dealings. We can look at those. We can have a calendar, have alerts set, and say, well, if something comes out that is really quite extreme, then we're going to get a supply-demand imbalance. We could potentially then get a filtering criteria. We could get that drive, we could get that extreme volume, we could get extreme range, we could get exhaustion. So we're rather than the whole point of this, guys, is that we're not looking at every single thing in the world and hoping that something's going to come along right in front of us at the right time. We're using an approach that says, okay, filter for relative volume, filter for range, filter for earnings, filter for these kind of things that we're interested in, bring them to our attention, then we might come into more filtering process, eyeballing it, saying, well, that matches it, that doesn't match it. Number 3, so scanning for specific interest criteria, use social media flow and news. We're going to look at social media flow literally in a second, but that might be something that brings it to your attention. Again, what we're trying to do with this, guys, is bring potential trade ideas to our attention. Going back to that funnel, the idea of the funnel is we put ideas in and then go through the filtering process. So these are just bringing ideas into us. Maybe it's one aspect of the filtering process, i.e. the range or whatever, but bringing ideas in that we can then filter into our trade idea database and then potentially pull the trigger on. So that's the whole point. So we might scan on something like stocktwits.com if we're trading US equities. We might trade on, look on Twitter as well to see there's a lot of flow around a certain asset, or maybe it's in the news. Maybe there's a lot of news about crude oil or about yen or about this or about that. That it could be enough just to bring it to our attention and say, well, we might bring it to our attention and go, well, nothing's going on. It's just chopping around. Forget about it. It's got nothing to do with my filtering criteria. Or it might bring it to your attention and go, well, actually, I've not looked at gold for a while, but there seems to be something going on in gold. And then why do we do that? Because again, let's think of this chess game. The chess game is, well, other higher time frame, bigger money may well shift money out of this because they're concerned about what's being said on the news. Not that we care so much about that and guessing from that, but what we're trying to identify is whether bigger money will flow in or out. Once we've identified that, then we can be early and be ready for those momentum ignition trades or those exhaustion trades. Number 4 is placing filter past trades, i.e. trades that have gone through the filter into a database and then setting alerts for a pre-trigger. So let me explain this. So you'd basically say, okay, well, I've put these trades through a filtering process, whatever that is. Is that my range? Is that my percentage change? Is that my, that would be the easiest one. Let's say if we were doing that for a flag type trade, it would be, okay, we've had 6 days up in a row and the move has been 10%, let's just say. Obviously it depends on your market, which is why I don't want to kind of put specific things in your mind, because we all trade different things, but that could be your filter, right? So that, when we could put those in something like finviz.com, again, I'm going to that because that's US equities, but there are plenty of others out there. Do some kind of searching for your specific market in your country and the markets that you trade, but that will allow you then to search for and scan for those kind of stocks. You can then put those into a database, and then you can scan that database for alerts. So you can then say, okay, well, now, you're going to have to be limited, obviously, by the nature of what you're using. If you're using something like finviz.com, you might not be able to kind of see if it breaks a very short-term downtrend within a flag. Of course, you might have to have something proprietary coded if you ever wanted to go down the route. You don't need to. I'm just saying, if you bring it into a database, you could then add further filter criteria to bring it down, because the idea is you want to bring the whole universe down to something that's manageable. If you've then got 10 stocks or 10 markets that are potentially creating opportunity in the next week, that's perfectly manageable, right? You've got the cream of the crop in front of you. And that's kind of, I guess that's a succinct way of putting it, is that we're trying to get that cream that's gone through the filter, and then we're going to have to do some manual work. Then we're going to have to look at it and say, well, actually, I'll buy that if it does that. That doesn't look right. Okay, so now I've got 8 here. Okay, so now I'm watching 8 for my trigger. They're all passing the test. They're all setting up as I want them. They've all got the criteria I need. I just need to see this on this. I need to see that this candle on this and this candle on this. And that then makes your life a lot easier, and it makes sure that you're putting only the very best trades in front of you.